When I was broke, I had rich habits. When I was broke, I had rich habits.
All right.
So I am lit and ready to go.
New album, man. What's going on? We know for a fact this is episode 13.
Yes.
We know that.
13.
And we've got new theme song, new theme music.
Potentially.
No, I think it was in there. We don't know yet because we don't hear it
going
until
in?
post.
It'll be in
Okay,
there.
true.
Yeah. Little new banger for the
Yeah.
intro.
Did you make that banger? Did you have something to do with that?
Yeah, I made that banger. Shout outs Ghetto Socks, Guilty Simpson, Chan Hayes. It's an original.
Jan Hayes? Jan Hayes?
Yeah, that's what I was.
No way.
Tanner asked if it was copyrighted. Like, yeah, to me.
Yeah.
Good.
Anyways, yeah, welcome to the Master Keys Podcast, episode 13.
Early edition.
Early edition. We're in here way before my wake-up call.
Yeah, and you're still late.
And
somehow.
I'm still late. I was only 8 minutes late, so not the worst.
Yeah.
But today we have a special guest.
Yeah.
It's a friend and I guess I'd say co-worker of
Yeah,
Chandler.
man. Longtime buddy, Igor. Igor
Yeah.
Geshelin. Want to
Thanks for
introduce
having
yourself?
me. Yeah, Igor Geshelin, Premier Mortgage, the Bentley Group. Thanks for having me. I'm pretty excited about it.
Yeah, no problem. Igor and I go way, way back, actually kind of relating to, we were both kind of like around the hip hop scene back in 2000. That's how we knew each other
Whoa, whoa,
originally.
whoa, whoa.
Oh yeah,
What's
I've known
your
Chandler.
street
it's Igor.
Hey,
Yeah,
Yeah.
yeah.
Yeah, I used to break. I was a b-boy
Yeah,
or a
he's a big-
breakdancer for layman's terms, competitively for a long time.
Yeah.
For those listening, they can't see my face right now. My jaw, I'm
pure
currently scraping
shock.
my jaw off the floor.
Pure shock.
Yeah.
I've known Chandler since I was, like 18? So
Yeah,
loosely.
yeah, it must have been 18 because I think you couldn't get into all the venues at the time, and I just barely could.
I still found
Yeah,
my
the
way.
Khyber and
Yeah.
good old days.
And
man,
then we
good old
st-
days.
so
That's
Chan-
21 years ago, man.
So Chandler started selling real estate around the same time that I became a broker, and
Yeah.
we kind of connected on that,
Yeah.
and then became like we just knew each other. But then
Yeah.
we became friends, did a couple of deals together, and then really grew our like professional and personal relationship.
Yeah, like I was a
way.
professional student for a long time because I'm a bit older than you are, and then you were doing business, and I think you did a work co-op at a mortgage
Yeah.
company, right? Yeah.
Yeah, well, I did a work co-op. Actually, so I have a finance degree from Dal, which I won't talk about that, but I did co-op at Century 21. And that was my first co-op because I knew I liked real estate, but I didn't know what that meant.
You knew you liked real estate and gold jack.
Yeah,
Yeah.
Into the gold, little
That's right.
C21 co-op.
Yeah. But no, I drove their
Shout out
little
Century 21.
I drove their little smart car and put up sold signs, and I was like 19. It was just a nice way in, but I actually
Totally.
learned a lot about just the boring background of real estate through it.
Yeah.
Like I could put together a purchase agreement back then anyway. And then I met Scott Bentley, who's now my business partner and longtime mentor, who ran a Centum office because those have the same parent company. And I was doing a finance degree, and I realized I like real estate, and a mortgage is financing real estate. So
Yep.
it was like this light bulb. I was like, oh, this is the part of
Yeah.
real estate that I actually
And Scott's
like.
a cool, interesting guy too, man. That
Yeah,
guy's got some stories.
Scott's fascinating. And anyway, he kind of took me under his wing, and then we joined Premier in 2009, which is when I graduated from Dal.
Which is also, I think I got licensed the fall of 2008, and you and I had both, we'd known each other, but not nearly as well as we do now. And it was very synchronicity, some whatever. I mean, it was perfect timing for us both.
Yeah.
We were launching our careers together. And I call Igor the Rain Man for anyone who asks me about mortgages. I'm like, Igor's the Rain Man, he makes it rain. Because you've done, I think, every single deal I've done the last decade plus has been through you and a lot of my clients as well. So we have a lot of questions that have built up over some comments online and just things that we wanted to go into a little bit more in depth about lending products. So we thought I'd bring you on, man. So welcome.
Yeah.
Totally.
exciting.
So that's the background. So this is the only thing I've ever done,
Okay.
Yeah.
professionally, I guess.
Yeah.
Outside of crushing beats with Chandler.
That's
So-
right.
Side hustles aside.
That's right. Yeah.
But let's recap, Neal. What's going on? What's new?
Not much. I mean, obviously, this is a doubleheader week. So
Yeah. We recorded an episode a couple days ago.
I'm still trying to close this multi-unit.
Ooh.
And we've been having some slow funding.
I have nothing to do with that, for the
And
record.
Igor has nothing to do with it specifically in this case now. But we've been just dragging along. It's because it's a reassignment. There's multiple lawyers involved, and everything's bouncing around like crazy. And it's a 3-property deal, and one of them is not closing. So I'm closing 2 out of the 3, so everything had to be amended. And it's just been like every day I wake up and it's like there's these 800 things that need to change. And it's just been the bane of my existence. But
So the one that's not closing, are they still advancing those funds, just holding them in trust, or it's like, no, we're going to reissue a new?
They didn't even advance. So like the letter from it's Graysburg that's closing it.
Right.
They didn't even send the funds on it. But I just got a
Do you want me to
environmental
call them
report
for
on
you?
it.
Or?
Yeah. If you can make a few calls today, that'd be great after this. But yeah, so I just actually got an enviro report from that site showing that it's good, and Nova Scotia Environment actually closed it out
Oh, really?
based on that letter. So we've actually got that letter closed and everything, which is the bomb. So now I'm in the process of trying to get that done. But like
That was very quick.
that was very quick.
And
Well, the seller had it the whole time.
The seller had a closed environmental site letter the whole time.
No, he had a 2012 OCL soil sample showing that the soil is clean and the remediation was done fine. And he just has not mentioned this for the last like 2 weeks as we're all losing our minds with this NSE letter in hand, being
Crazy.
like, what do we do? And anyway, so now he has it and it's clean. But then it's on the team. They're like, oh, well, it's in now, so we want to close tomorrow. And I'm like, unfortunately, you can't.
Not how it works.
Yeah, it doesn't quite work like that with this. It's not, you know what I mean?
Yeah.
I was like, even though things are in place now, like Graysburg's got to send it out to Group McGinnis, and we got to get an insurance bind. Like, there's a million and one things that have to go into place.
Yeah.
So, anyways, it's been it's a nice little wake up call every morning because one of the guys in the deal gets up at 6 and just starts hammering my phone. So I get up to like 86 messages, and he usually has resolved his issues in that time, but he comes at me first, or every time he thinks something pops in his head, and he's like, "Gotta go after Neal."
Well, that's good, man. I'm excited for you. So
If it ever closes,
they're going to now close all three at once. That's the thought?
no,
no,
we're
still
just gonna close the 2.
Yeah.
Because then we can actually close this week, and the third one will close next week.
Where are they?
Spryfield.
Okay.
So that's where I kind of started my multi-unit game, was in Spryfield, and I was fortunate at the timing.
Yeah.
Yeah. Same street too, right?
And yeah, so I bought them all on the same street. So I'll have 6 buildings in a row on the same street.
Which street?
Spencer Ave.
Okay.
Yeah.
Yeah.
Yeah. So
Yeah, that's awesome.
yeah.
So it makes it so much easier to manage and all that, but glad
Yeah.
I got past the finish line. And you're out for a little boat cruise last night?
Yeah, I took the team for a little boat cruise.
Saw that on the ground.
So yeah, the building that I live in has a sailboat and a center console, and they come with like a driver, basically a captain, I guess. And so as part of my signing of the lease, they gave me a certain amount of allocations.
Nice.
And so I had some allocations left, and we've been wanting to go, so I took out my assistant, property manager, and then Tanner as well for a little boat cruise.
That's a
last
legit
night.
amenity.
Yeah.
So I remember like Kings Wharf talked about having something like that, the harbor ferry. And
Is that like kind of light grayish sailboat that's always
Exactly,
I
yeah.
always walk by there and I see it and I'm like, that's a really nice looking boat. It just looks really clean.
Yeah, it is a very. I don't know anything about sailing, but apparently it's a very neat boat in the sense that, like, sailing takes a lot of like maneuvering and multiple people to like move the sails around and tighten things and all that. This one,
it's very technical.
it's auto.
Right.
So
Yeah.
one person can drive it, and like it automatically flips the sails around
Yeah.
and tightens the ropes and all that. Like, they're just built into the ship.
Yeah.
So apparently very neat. I don't know anything about
That's always been
sailing,
my
so-
issue with sailing is it's way too much work. Like my family's all big sailors. Like you go out on the water. I don't want to go out in the water and work
Yeah,
hard.
that's it.
Yeah.
I want to sit there and drink beers. I went at one time
Chandler's
with
a
like,
pontoon guy. Big pontoon
yeah,
guy.
totally.
With a hoodie on. With a hoodie on. Really soaking in the rays.
Like I just put on my dog shoes. I'm like, I'm doing it. But my family's all big time sailors. Like they love to sail. My grandfather sailed the Blue Nose. My dad did like the Marblehead to Nova Scotia, like big sailing
Nice.
stuff. Like this is terrible. I went at one time with like a cousin on a catamaran. You think it's hard on a normal boat? You go on a catamaran, like you're jumping across these two things. I'm like, this is ridiculous.
It's double the work.
Yeah, double work. And we were at the Wanderers game last
Yeah.
night, which is
Oh,
fun,
nice.
I guess.
Yeah, it's good.
Yeah.
We had good seats and
Yeah.
they lost 1-0, but
Yeah,
you know,
yeah.
that's okay.
I just go there to hang out, and it's outdoors, and it was nice.
Nice.
Yeah.
That's good. I got to go to one of those. I have not been. They sell out every time, I think.
I
Pretty close to
think.
it.
I don't
Yeah,
know.
I mean,
They're popular.
I think it's been weird with COVID.
Yeah.
But,
Yeah.
But they have been popular for sure. Like the first year, the city really got behind it, which was cool.
Yeah, that's what I say. I feel like the city was really pumping it to get going.
Yeah.
Yeah.
But
Well, we're going to get into this in a second, but one last thing. You're talking about, making panic calls and trying to sort things out and blah, blah, blah. I think I mentioned this on a previous episode when they were going through the center plan and I applied to get more height on that one location.
Yeah.
And it said, no, we're going to keep you the same, and then accidentally dropped it below. So I was
Yes.
at 20 meters, which is about 6 stories. I'm like, well, it's a corner lot. Maybe I can try to push it for 24 meters and get 2 more stories.
Yeah.
And they said, no, we're going to keep you the same at 14 meters. I'm like, what? No. The same was 20 meters.
right.
So they were cutting me down. And so I went through and you can submit corrections. So I submitted my correction. I'm like, I'm sure it's all taken care of. Submitted my correction. They're like, yes, our mistake. No problem at all. And I mentioned too about having good friends and clients who are planners and what an asset that can be.
Yeah.
One of them was just coincidentally surveying the area. And he's like, just so you know, they never made that correction. You're still in here at 14 meters.
No way.
So I just took for granted that they made the correction. So I sent out like the emergency call to every single person I knew.
Straight to the president.
Bat signal, get me the president. And it got taken care of. But I was having some heart palpitations the other day about that. 'Cause that's a big deal, man. That's the difference. Like, you're taking off 30 units or at least 20.
That's an interesting point, I think, about real estate and mortgages as well, and what makes people good at doing either one is that you have to babysit everything beyond what is quote unquote your job.
Oh, 100%.
Right?
Yeah.
But that's where you do see deals fall when someone's like, well, I sent it off and I assume it got done. It's like, no, you then follow up 10 times and you get confirmation that it got done. And that's how it gets done, right?
And how funny is it that we're usually more slack on our own deals for ourselves
True.
than we are for other people, right? Can you relate to that?
Big time. Oh my God. I'll be all over my client's deal. And then my own personal one, like I'll get a message from Brenda and she's like, did you know the deposit was due? And I was like, the deposit. Yes. And then in the back of my head, I'm like, I didn't do an inspection. I didn't look into the financing. I didn't do anything, but here's the deposit.
Yeah. I had Halifax Water, Nova Scotia Power cut me off on a building I just bought because I forgot to put it in my name. You know? Like, it's just
Like, oh yeah, that's
that,
the thing.
That.
And I should mention that I talked about this when we were discussing, building a team around you and how the buying process works. And I'm a big believer in having people around you that are inspiring and that are like-minded and that are doing the same things that you want to do. And Igor, you also own 3-4 units and a couple duplexes, if I recall correctly.
15 units total.
Yeah. Nice.
And our office, Scott, my partner, and I own our office too downtown. So yeah, it's funny, not to toot each other's horn, but Chandler's someone I've always looked up to for that because, when we connected, I was starting, he was starting, but he was already buying like a duplex and then another one. And
He was quick to get at it. Yeah.
Right. And we had so many clients. So Scott, my partner, his client base from, years ago, we did probably half of our business was investors.
Yeah.
But that's when you could buy rentals with no money down or 5% down. So that, yeah. So then, it became, I guess, a smaller percentage of our business when less people could play. But it was always a big part of what we did. So from when I was like 20 doing this, we were helping so many people do everything you guys are talking about.
Yeah.
And I was always like, well, this is great and all, but I want to do it too.
Yeah.
So then, working with Chandler, who was ahead of me doing it, it just made sense.
He had some of the knowledge to be able to pass on that he's learned from his first few that he could get going.
And it's just someone to push you to say, okay, well, I want to do what they're doing. So,
Yeah.
I don't want to get sidetracked, but there's no money down.
Once upon that was just before me even.
So when I started doing mortgages in 2009 or 8, you could buy a non-owner occupied duplex, okay, with zero money down. Hang on, 40-year amortization, insured by CMHC, and the insurance premium was 6.95%. So you had a mortgage for 107% of the property's value on a 40-year am. So you weren't paying that thing down.
Yeah.
But we had guys who were living in their parents' basements, and if they had a decent job and a pulse and a credit score and closing costs, they were buying duplexes. So you look at certain neighborhoods, like you mentioned Spryfield or like Kennedy, Rolika, all those things that were trading for like, what was it, a buck?
150.
150
Sometimes even less.
for duplexes.
Yeah, 60 a door, yeah.
Well, what are the closing costs on that? $3,000?
Like $2-3 grand, yeah.
So great, sign here. You want another one?
I
Sign
just missed that. I know. I just missed that window when I was doing it. It's like they just changed the amortized. Oh no, I think it was still 40-year am when I bought, but it had to be 5% down. And,
right. Oh, God forbid.
I know. And I'm like, and I make 2.5% commission on the deal.
Yeah. So
I had 2.5% is what I needed to get the deal done.
And then they changed it to, okay, a rental 5 or 2 unit was 5% down. A rental 3 or 4 was 10% down, right? And then so it was still very attainable.
Insanity.
And then the CMHC said, okay, wait, we don't want to be involved in this, so we will no longer offer insurance on this stuff. So therefore, it's 20% down to play. So that changed things very quickly for 2 reasons. One was just way less people had the money.
Yeah.
But also even people who had the money, like if you were used to putting 5% down on a 2 unit, and then you were measuring your cash-on-cash return on that, you were laughing, right? Because your investment was nothing. So any return was good.
You're returning infinite.
But then, right. But then
$15,000 in.
Sure.
Right. Like.
But so
maybe.
then if you suddenly, and again, like we're, in retrospect, people were very spoiled in thinking this way, but you said, oh, now I have to do 20% down. My investment has quadrupled. Well, my rents haven't, so my return is now a quarter of what it was last week. Well, I don't want to bother, right?
Yeah.
So then that changed a lot, but it's been now 20%'s been the norm for so long that it's
Yeah, and that's if you're not owner occupied.
right,
Yeah.
right. It's just like whatever. But yeah, non-owner occupied, 40-year AM.
Yeah.
So I'm just gonna be super millennial and say, way easier back in the day.
Yeah,
This
big
is
time.
He's agreed.
Yeah.
But
Yeah.
no. I mean, there was probably the other thing.
We also
was,
had a lot of down years,
I was
and
gonna
you
say,
couldn't
the-
necessarily rent the apartments right away.
Right.
the other thing I was gonna say. On the flip side, yes, you get this building, but the rents probably were not that exciting. You couldn't really crank them up.
Yeah.
Even if you sunk in $100,000 in the building, you probably weren't going to crank them up that much.
Yeah.
And the following year, the building's probably worth about the same amount.
Yeah. And you haven't paid it down any because you have a 40-year amortization.
Yeah, and
Yeah.
if you work on.
Right.
Like that's
And-
the one thing when they started taking down the amortization is that it made the refinances more enticing.
Well, more
because-
possible.
More possible.
Or
Yeah,
sooner-
like there was
sooner
actually,
possible.
I actually have equity in this property, whereas before it was like I have no equity, but I have the property.
Well, you had no equity because you were financed to 107% from day one.
Yeah, and not making much
and
in the way
not,
of principal.
and not
Yeah.
paying it down.
And
The
rates
oth-
were a little higher.
The other issue that I assume is part of the reason that CMHC got out of it is because it took nothing for people to walk away from those things too the second it went wrong.
Right.
Yeah.
The second you had vacancies or issues, you'd say, here's
Nothing really
here's
held
my
you in.
keys.
Yeah.
Yeah.
I got nothing in this thing, so
Yeah.
see ya.
One of the questions that we had, and just to backtrack a little bit, or to get towards a different topic a little bit, we covered because one of the federal mandates was to sort of revisit the down payment matching through CMHC,
Yep.
and the idea that rather than take the same 5% of what you put in and take all that. The 5% of the new value when you sell it, they're now just going to fix the amount they put in. So there's this program out there, and Igor will speak to it here, where if you're putting 5% down, CMHC will also put 5% down so that you have 10% equity in the property, which lowers your payment and lowers your CMHC premium. But in the past, the challenge, or still currently, I don't know if they've changed this yet.
Nope.
When you sell, there's some cons to that. So tell us about the program first, and tell us the positives, I guess, with it.
Yeah, so it's a federal government program cleverly named the FTHBI, which is the First Time Home Buyers Incentive. They didn't bother.
It's an
Love a good acronym.
Easy
Yeah,
acronym
yeah,
there.
just easy to absorb. And so it's a shared equity program, and that's really important to understand. Now, it's not good or bad. A lot of people, I think, in our industry in the mortgage business say it's bad because I think they didn't bother doing the math, frankly. Nothing is good or bad. Everything is case by case, as cliche as that sounds. So the way that it works is, say you do your 5% down, which you have to. If you meet the criteria, which I'll explain, it's very simple, you can get the government to give you another 5%. And it's very simple, like in the sense that if you meet the criteria, they'll give it to you. Or you don't and they won't. Like it's not like maybe not. If you qualify, you get it.
Yeah.
The criteria is simple. You are a first-time buyer. Your household income, so whether it's you or two applicants, is no more than $120,000
They're increasing that, aren't they?
in certain markets.
Okay.
Because in Toronto, because of the next point I'll make here, in Toronto and Vancouver, it's useless.
Yeah, no one qualified for it.
Because the third part is the amount you borrow, which is the mortgage. So say 90%
Must be less than Ishmael.
plus the 5% from them can't be more than 4 times your income.
Oh.
So if the income is capped at 120, that means your borrowing can't be more than 480, which means you can't buy anything in certain cities.
Yeah. Who are the like? How is that a usable program in some?
We've already got almost the average house price is $700.
Right.
Toronto's average is like 1.1, and they're like,
so it's
sweet
utterly
program,
yeah.
$480,000 sheds.
Yeah, it's utterly useless.
But it gets even more complicated because what if your income isn't 120K?
Right. So this is another point. Now, the other thing, just to quickly mention, is if you're buying new construction, you can actually get 10% from them. You can choose 5 or 10
yes. Yep.
On top of your original 5. Now, here's another point. So say you have an applicant. This especially happens with single income applicants. Say someone makes, $70,000 or something like that, and they have no debt. They might be able to qualify for a mortgage of, X amount.
Yeah, it's a great applicant. They might be able to qualify for mortgage. It's like
Low threes,
Low threes, yeah.
360, 350. Yeah.
Yeah, like say low threes. But if they want to use this program, 70 times 4 is 280, right?
They can't buy
So-
a house over 280. Yeah.
Right? So the program actually sends them backwards in what they can get.
Yeah, so there's some
Yeah.
broken
Yeah.
math here.
Because it's the government, and I make no qualms in saying that, they come out with stuff to be like, look at us, look at what we're doing for the consumer and for the little guy, and we're all about the middle class, and like, I'm not a political guy, but, I think in every industry, people in it look at programs that the government did, quote unquote, for everyone's own good and roll their eyes and say, like, if only you had asked us.
Totally.
Yeah.
What
Just
we
ask
actually
someone
think.
in the know. I mean,
And they
this,
say that they did, but that's total nonsense.
Yeah.
Because then these little fallacies wouldn't exist.
Take place, yeah,
right?
100%.
and I think in certain markets, we've mentioned here in Nova Scotia, you drive an hour and the price drops by 75%.
Right.
Yeah.
Right. So there are areas of the province where this would have been like, this is amazing.
Right.
Yeah.
I'm getting extra equity in the home right away. Payment comes down. All of these things are great, and those houses are affordable.
Yeah.
But ironically, these are meant to make
The expensive
Things-
house is more affordable.
the expensive house more affordable,
that's
and
that's
it
the,
didn't function.
the pitch of it anyway.
And that's where most of the population lives too, obviously. And
Right.
So,
Yeah, this wouldn't really be. This is why you and I, when I was like, I never knew anyone that used that program, and someone who was I think in the Valley,
Yeah.
quickly pointed out that he had used it, and like these numbers don't really jive
work a
here
lot.
in town a whole
Yeah.
lot.
So we've done a bunch of them, but so here's the flip side. So this kind of the benefit is a bit technical, but I'll explain it as quick as possible. So when you put less than 20% down, you have to pay default insurance. CMHC, what people often interchangeably use with default insurance,
Right,
it-
yeah.
it's just one of 3 insurance companies, but the cost of the insurance is the same between
Yeah.
all 3 of them. So
Genworth and
well,
Canada Guarantee.
Genworth's
right?
just rebranded for some reason. Now they're called Sagen,
Okay.
but Canada Guarantee is the third one,
Yeah.
and then CMHC is the government-owned Crown Corp. So the point is, if you put 5% down, the cost of the insurance is then 4% of the amount of the mortgage.
yeah.
So it's 4% of 95%,
Yeah.
right? If you put 10% down, the insurance cost is 3.1.
Yeah.
So you save almost a full percent of the entire mortgage amount if you do the 10% down.
Yeah.
Yeah.
So putting
a few $1,000 anyway, and then
right.
multiplied, compounding
it's
interest,
something,
whatever.
right? So by using this program, to me, the biggest benefit is, ironically, it's the government and the insurance company giving you the money to lower the insurance you pay them,
Yeah.
right? So that's the benefit. So you save a few $1,000s up front, right? And then, so on say like a $400,000 home,
Mm-hmm.
doing this would save you about $4,000 up front
Mm-hmm.
in the insurance,
Actual premium.
right? And then about $100 a month on your payment because your mortgage
That's
is
huge.
lower,
Yeah.
right?
That's huge.
Yep.
And the payment is important, I think, in determining like if this is good for someone or not, based on how long they may own the home.
Yeah.
Because the payment savings need to amount to something, and that happens over time.
Mm-hmm.
Right, $100 a month in a year is $1,200. 5
Yep.
years is $6,000. So 5 years is an easy window. $6,000 in payment savings, $4,000 in insurance savings. So you're
Yeah.
up $10,000 in 5 years.
Right. The catch is that they own
Five-
kind of 5% of your property, and this is what they're
Right.
looking at changing. Because
Yeah.
explain why that can be a bit of a bummer.
So it's shared equity. So you're up this $10,000. You borrowed on a $400,000 home, $20,000, right?
Yeah.
5%. When you sell, you don't owe them $20,000. You owe them 5% of what you sell your house for.
Yeah.
Now, say you sell that house in 5 years, and say we have like not the crazy appreciation we've had in the past 2 years. Say it's 5% a year. That works out to like low 500s.
Yeah.
So say you sell for 500,000, right? So you now owe them $25,000.
Right.
Yeah.
5% of that. 20 of it was never yours, so that's fine. So this cost you $5,000.
Which eats into all
but
the
you,
savings
but
we
you
just talked about,
saved
yeah.
you 10.
Yep.
So you're still up 5, and you've enjoyed a lower payment for all those 5 years.
It's true.
Yeah.
Yep.
So not bad.
Yeah.
And today's 30% year over year, or as CMHC says, 75% year over year
Right. Then-
appreciations, you might.
Then you're getting smoked.
Yeah.
But is that going to keep happening every year? going
No,
forward?
No,
Right,
definitely not.
And
Definitely
realistically, those gains have been in markets where you couldn't get this program anyway.
Totally.
Yeah.
Right. But they are looking at changing that. One, I think they're going to tweak all the qualifications to make it actually usable.
Yeah.
In these major markets.
Allegedly.
And two, allegedly, they're going to say, okay, your 5% at the time was $20,000. When you sell down the road, you're still just going to owe us that $20,000
Right. That'd be nice. I mean, but then,
if they go through with it.
then they're just doing it
Bill of rights.
out of the goodness of their own heart, right? Like that's
Yeah.
I don't know. I'm Eastern European. I don't trust the government, you know. So
Yeah.
I mean, it's funny how they offer this program at the same time as housing is popping off.
right. Is that a coincidence? Like,
And running
eh.
for an election and
Right.
all
Yeah.
this stuff.
Now they'll also share in the downside. So when values plummet, you only owe them 5% of the lower number.
Yeah, yeah.
Which like great and all, but that's not.
See, this is the sort of nuanced expertise. I'm not trying to pump your tires. People ask me all the time, why go with a broker as opposed to a mortgage professional just
Going
sitting at a
straight to the bank.
cubicle at
Yeah.
a bank? And I think we should be clear that a mortgage broker does deal with the major banks. Like a lot of my lending products right now are with Scotiabank and BMO,
Yep.
right? But they're all brokered by you. I'm not going to say anything. Neal, you can maybe say something if you want, but like why would you say go with a broker rather than a bank?
I'll let you take that.
There's two. Like I get asked that all the time, just by new clients reaching out, and it's a genuine question. Like I don't think people are asking it in like a combative way. Like why should I deal with you? I think people genuinely don't know, and they're like, why? Like what do you guys do? Because people don't know. So I think there's two answers, and this is how I answer to clients. There's a generic answer, which is true yet generic, which is that brokers have access to lots of different lenders instead of dealing with just one bank. So, banks differ in programs, and with rental properties, that's actually really crucial. But,
huge.
Even just for the average first-time single-family home buyer,
Yep.
choice is important. Representation. So a broker represents the client, advocates for the client, and presents your file in the best light to the lender, as opposed to you being thrown to the wolves just dealing with the bank, and you don't know how to interact with them or how to present yourself. So representation in that sense. Also, the person at the bank works for the bank. Their job's to make their employer money, right? Their interests are not your interests. Sorry.
I always remind everyone this. I'm like, the bank, everyone has this weird thing of like this comfort level with the banks on my side. And I'm like, the bank's another store and they're selling you a product. They're the Walmart of money.
That's right.
Like, they're there to make money. But
yeah, that's
not
a good.
cut you off,
I'm
but-
going to steal that. I like that. So that's the generic answer. And that's also where you get into, people say, oh, you get the best rates. Well, yeah, when you actually buy a house, there's lots of these different lenders available. They're all offering competing rates. We'll find you a great rate. Like that's a given. It's just a starting point. So any broker should be able to articulate that, because that's just how the system works. Mm-hmm. That's not any one broker's value proposition. That's just how the whole thing functions.
Yeah.
Right? And all these banks are competing through us for our clients' business. All the banks know that, so it forces them to be like as forthcoming with their best offers as possible, instead of playing that game,
Yeah.
where they see like, are you happy with this rate? Okay, we could have gone lower, but you seem satisfied. So
On that note, I'm going to ask you, I was told by another broker recently, like, sometimes they can even beat the rates that the guys at the branch can offer. Like, I know one said based on their production as a group, let's say it's with whatever, CBC, if you do 100 million in lending products, they offer you exclusive rates that you can offer, that you can actually beat up against the regular, let's say, cubicle
from the same bank.
Financial. Yeah, exactly.
Yep.
So he said, because his client was like, oh, I'm getting quoted 2.1 from the bank. And he's like, oh, I can give you 1.89.
probably from the same bank.
And it was from the same bank, but it's because of the volume.
We had a transaction early on where someone got denied by a bank, and then you got the mortgage done with the exact same bank.
Yeah, and that's presentation, right?
Presentation, that to me is a huge thing. And a lot of listeners will have out there, if you've got side hustles, know yourself. If you are not a Class A borrower in the banker's eyes, you need a broker. Right? If you've got this money come from here, this is an independent contractor, this is like temp work. Like
even more simple things that you don't think about, like say nursing is a really good example, right? The nurses make good money, obviously health professionals, very in demand. A lot of them work what are called casual jobs.
Yeah.
That's how they're classified. So they work full time, but they're not guaranteed full time hours.
Crazy.
Teachers, teachers, great, government job, cool. A lot of them are on term positions until they get like way into that school board bureaucratic, ladder climbing. So my point is that even like, people with side hustles and contract work and all this stuff that's becoming more and more common, that's complicated. But even things that at face value may seem simple are not so cookie cutter, right? And so if you've got someone who puts your file away at 4:30 and they're off for the next 2 days and you are not on their mind. Like, I lose sleep over deals quite literally, right? Like I wake up being like, right, I got to fix that tomorrow,
Chandler.
Yeah, exactly. So
deposits too.
Yeah. But, someone, and that's the other thing too, like not to bring money into it, but like someone on a salary, and this is not a slight to them, but like they shouldn't be trying to work the extra mile for you because it doesn't do anything for them. And no, sorry, that's just how things work.
Yeah. I said to a lot of people, because a lot of people ask me like, why the broker, and I'm like, right off the hop, they're not getting paid unless your deal closes, so they're all in to make sure that thing is going to close. And yeah, exactly. I always say the same thing. Unless you're like super simple, I've been making biweekly income for the last 10 years. It's set standard, and like I only interested in buying this one house, and it's well within my range. Yeah. Then I'm like, all right, probably just go to the bank. But otherwise, I'm like, if there's anything like you said, or even multiple people, or they're buying a secondary property or whatever it is, I'm always like, broker, you have to, because they need to look at your whole picture. Totally.
And the other thing too is the experience. So that person, you're right, they'll get approved by the bank. Like it would take a colossal mistake to mess that up, right?
Yeah.
But what was that experience like? Like were you hounding someone for 3 days just to get back to you? And sometimes that's the case. I mean, you guys send agreements to banks all the time. Do they even acknowledge receipt of the agreement?
Often not.
Right.
I always say, call them. And like, well, I can't really call them. So what do you mean you can't call them? It's like, well, the bank, like the phone.
You don't have a number line straight to them.
Like,
or like, oh, it's 6 o'clock.
Yeah.
It's like,
Yeah, and I'm not trying to beat up on them because there's a lot of awesome independent brokers within the banking system, but they are limited in their products they can offer.
It's not necessarily even their fault. It's just the way the system is designed for them. It's an order-taking system. You come in, you say, I want this, they fill in the forms, next client, right?
Yeah.
So for us, so again, everything I said earlier is generic but true. And then for our team specifically, what we really focus on is making it a very educational and transparent process, especially for first-time buyers. So they don't just get pre-approved, but they understand like how it happened and what happened along the way. And then also being actual advisors. So, there's a lot of structure, especially for people who want to grow with real estate. It's not about just getting this one deal.
Yeah.
It's about doing it in a way that positions you best for your next deal.
100%.
Exit strategy. I've pounded that drum a lot in this already. Exit strategy and having a broker who gets it and is doing the same thing personally and knows where you're trying to get to is hugely important.
Yeah. And then the other thing is we've done everything you can do with a property between Scott and I, between rentals, flipping, Airbnbs, building. Either he or I have done it. So again, when you're talking to someone who is reading like how to do the thing you were asking them to do out of a manual,
This is huge.
right? Versus,
I'm obsessed with this.
hey guys, we've done this. We're not an armchair quarterback.
Yeah.
And that's, I guess, some people haven't had a chance to do it yet. And there was a point when I couldn't have said that, and that's okay. But just in general, if you're doing something again that someone's like, well, according to the policy that I've read, versus, hey, here's how you actually do it.
Yeah, you're.
I'm chomping at the bit, and I'm probably like, this is like I'm gonna get some hate for this, but you can't learn to buy a Rolls Royce from someone who drives a Toyota Corolla.
I think this is the second time you
Have I said it on here?
I love that. Yeah.
I think that's the best, but I think it relates to what he's saying, right?
Totally.
And
100%.
same with us. That's what we were saying earlier, and this is I think where it came up before is working with agents that don't necessarily haven't done the investment. How can they
Advise you.
Exactly. How can they advise you on that? And it's the same for you. You can be a lot more advisable if you've done it and understand exactly what they're going through and what they're looking for and how they need to grow.
Yeah. Coming full circle, me and Igor love this same rapper named Rock Marciano. And I know you're thinking the same line as I've got Lamborghini dreams and Nissan nightmares.
Yeah.
That's this line he has, which is phenomenal.
Yeah.
Anyway, we were talking about Kanye last night. What do you think I rap for? To push a RAV4?
Yeah.
Which is a great line, but also as a RAV4 owner, it stings a little.
Yeah.
RAV4 is a great, reliable automobile. Anyway.
Yeah. Well, that's not what you rap for.
And that's
I want to go back to the CMHC real quick here. We made a quick mention. I mean, we talked about it for a different reason, but we also made a quick mention of it used to be that you could do 100%. Now you have to do 5, 10 with an owner-occupied situation.
Yep.
Have you heard or have you seen on those owner-occupied? Because I mean, a lot of people claim owner-occupied, buy it as a rental. How I'm going to live in one unit and rent the other. I think we've all seen maybe potentially a client
I've
renting.
heard rumors about this.
I've heard rumors of people potentially renting both. Don't know anyone who's done it, but
Sure.
Neither confirm nor deny.
yes. But have you heard, I've been told that CMHC has had independent companies or they're going out and they're checking. They're like,
Yes, you mentioned this. I'd never heard of this.
I've never heard of that. I don't know if they have the time or resources to
Interest.
do that. I mean, that seems pretty wild. Because also, for how long? Because so do people lie? Like, yes, men lie, women
Never.
lie, numbers don't, right?
Never.
So,
Never have.
So do people say they're going to do a thing and then do a different thing? Obviously.
yeah.
But do people legitimately buy a 2-unit and live in one and then 2 years later rent themselves out of it
Upgrade.
and buy another property?
Yeah, or life changes.
Obviously,
Yeah.
life changes, they move, whatever, right? So they didn't lie, but then their life changed and then their circumstances changed. So like if they were to do that, two things. One is like, what is the statute of limitations there? Like for how long? And secondly, if they were doing that, I'd be pretty unhappy as a taxpayer because CMHC is a crown corporation.
Yeah, also,
And-
why is CMHC going out there to send people so they can, now you have to put 20% down. They're kind of one, stepping on the lender's toes, and two, then they won't get the CMHC premium to begin with. I don't know that they have enough of a dog in that fight to do it, but
I just don't like the idea of
that's my
paying
thing.
someone, paying towards such a policing. you
Yeah.
know?
That's
Like
true.
either approve the deal because you trust what's happening as presented, or you call it out, and they've done that. They say, no, we don't believe you, so we're not going to do this.
Yeah.
And so if you've approved it up front, then own it,
yeah.
That's
fine.
my thought.
Yeah, I agree with you on that. And I think like for me, everything, money moves everything. And at the end of the day, if they're doing that, there's gonna be less lending going on and less money for the banks, less money for them. Even though it's Crown, they're still in it to make a dollar.
Yeah.
So it
they're
wouldn't make sense. It'd be against the
vastly
business model.
profitable.
I always
It's
tell people
absurd how much
too.
money
It is
they make.
nuts.
Yeah, and this comes back to you, Igors. To me, like, listen, the bank wants to lend you the money.
Yeah.
You just need someone to help you present a package to give them an excuse to lend you the money.
Yeah.
Right. So if you are not a class borrower, you need someone to present your file in the best possible light to give the bank an excuse to do what they want to do, which is give you the money.
Yeah.
So we talked a little bit about when you buy a property and you want to lift the value through the BRRRR method or something similar, and purchase plus improvements. You laugh at the BRRRR method the same way as I do.
Yeah.
Lifting the value of the property through purchase plus improvements, which is a big thing
Yeah.
that I did starting up, and I think, Neal, you've done similar models.
Yep.
I don't know if you have a
as well, yeah.
specific question about purchase plus improvements, but one thing you might be able to touch on is how it works, but then also how different lenders have different versions of the same product.
Yeah, so that's important. So purchase plus improvements is the ability to add money for renovations to your mortgage at the time of purchasing the property and finance it to the same degree as the purchase price. So we as consumers think of down payments, so say 5%. Banks think of the opposite number, which is called loan to value. So if you put 5% down, your loan to value is 95%. So if you're doing that and adding improvements, you get to finance the same 95% of your renovation. So say you buy a place for, $400, improvements typically tap out at $40,000. So that's a quick note.
Yeah.
And that includes tax, which people always forget about, because they're getting quotes and then it's like, oh, the tax. Well, so it's really $35,000, right, plus tax. You need quotes up front. It can't just be an arbitrary like, hey, Scotiabank, give us 20 grand. We need a quote from a contractor. Then that money is added to your purchase price. So say it was $400,000.
Is it often capped at 10% of property value?
That's old.
Is that old? Okay.
Yeah. So now it's usually 40 or 20%, whichever is lower, and 40 is always lower.
Yeah.
Right?
Yeah.
So some banks do have the 10 still, but like that's kind of outdated. So for 40,000 or 20%.
Okay.
And sometimes you can push it a little
doesn't
bit.
go as far as it used to.
No. But you can push it a little, but minimally. So you get the quote. So say it's a $400,000 home, $20,000 quote. Mathematically, the mortgage now works the same as if you bought a house for $420,000.
Yeah.
You put 5% down on $420,000.
Yeah.
But at closing, the money's held back. You don't actually get it in your hands.
Yeah.
And then you have to get the work done on your own accord, which doesn't necessarily mean paying for it in full, because you shouldn't be paying for it till it's
You
done.
want to communicate with your contractor that, hey, look, I'm using a mortgage plus.
Yeah.
You give me the invoice. And once I have the invoice from you, then I can go get the money and the work's done.
That's right.
Most contractors are
understand.
familiar with
At
it.
this point, yeah.
Also, you shouldn't be paying a contractor till the work is done anyway.
Maybe a
So
deposit or something.
Yeah, they might be
but-
like, listen, you got to pay the material cost or a portion of the material cost. And then I also find it motivates the
Contractor.
contractor, because they're like, can we get some money? It's like, yeah, when you finish.
Yeah, when it's all done.
Money's ready as soon as it's done, because I've got to bring an appraiser through. 'Cause
Right.
This is part of the process too.
So it's funny, you mentioned invoice, you mentioned an appraiser. So this is where it's
Options.
very different between banks. A lot of them have the program and they'll approve it up front. But when you really want your money, when you're done your work and your contractor's hounding you, the process to get the money released is very different as to what a bank may require from one bank to the next.
Yes.
So with some, it's super easy. With some, it's pulling teeth. So some want matching invoices
Yes.
to the original quotes. One bank, which I won't name to knock them, but they're the worst program. They want not just the matching invoices, but paid invoices.
Other receipts.
Like you got to prove you paid it already.
Yeah.
Which
So that means literally you're coming out of pocket for that.
right,
regardless.
which
And
then you probably didn't
Doesn't
need
make
the
sense.
program.
I mean, why did I borrow the money if I got...
Well, people just slam it on a Visa or something
Right,
like that, and then
It's an
pay off the
uncomfortable
Visa
situation,
in
yeah.
theory.
And most banks want us to present this proof to them. This particular banks want all these paid invoices presented by your lawyer. And guess what your lawyer doesn't want to do?
Any of that.
Count your Home Depot receipts.
Yeah.
So anyway, with other banks, all they want is an inspection, which is a lot simpler. It costs, $200 to get an appraiser to go out there. They're not
Yep.
actually appraising the home. They're just inspecting.
Confirming that's what I'm...
Right.
Yeah.
And all they're confirming is that the work as outlined in the quote has been done. Not by who,
Yeah.
not how much it cost you, no
Yeah.
receipts, just new floors, you got new floors. Check. Right?
The reason this matters is you're buying a process, you're going through your due diligence because you have to, or ideally you get this all done during your due diligence while you're arranging the financing. You're out there just trying to get these quotes together.
You
And
might
right
not
now in
use
this
those
market,
people.
It's so hard, yeah. But what happens if you get a quote from one person and then find a different person, or that person is no longer available to do the work, and you have a lender who's saying, no, it has to be the same person, same price.
Or what if you pay cash? Because let's face it, that's pretty standard in
Yep.
trades, which is legal tender. There's nothing wrong with it. What they
Yep.
do with the cash is not your problem.
Yep.
This is why you pick a realtor with a contracting company.
Hey,
Right.
there you go.
Get a quick quote
You get a very
on the
quick
spot.
quote.
Yeah, no, it's
Yeah. But then what if they don't use you? Because you're too expensive.
that happens. It's just an awkward situation.
oh gosh, that's hilarious.
But so again, that's a good point about a good broker. I'm not saying like only us, like there are other good brokers. But if you want Purchase Plus and someone says, oh yeah, well, this bank will do it without knowing like, is that actually the best bank to do it with?
Totally.
Yeah.
When people are like, oh, we're doing the Purchase Plus, and they say, and I go, what's your lender? And they tell me the lender, I'm like, It's
Right.
like, man, we're going to have to get like, and it's going to be an arduous process where the whole benefit of this is that it can be a really, really beneficial process. For example, you know, I tell people when you're getting these quotes, because the nature of work, the scope of work often changes, a quote that's a bit more ambiguous is actually helpful.
Yeah.
Yeah.
Like saying kitchen renovation.
Yeah.
That is helpful because
Don't,
what if,
don't
you know,
pigeonhole yourself.
yeah, you open up the wall and it's like, oh my gosh, you know, there's this issue over here and I've got to spend money on that. And all of a sudden, all I can do in the kitchen is less than what I thought. If you go in there and say, I'm going to have, you know,
Granite top,
quartz
this wall
this,
removed,
IKEA this.
And then you
know,
don't have exactly that, then the inspector can say work is only 80% complete
Yep.
per the quote, even though you might have a brand new kitchen, but it's
Yeah.
not exactly, you know.
Yeah, yeah. So,
So-
again, these are the things that if you're thinking about doing, and a lot of people are looking at that as a way to finance lifting a property's value, you need to have the team around you,
You
that
always
knows
should
how
be
to do that.
financing your construction. Honestly, I'm like
Yeah.
100%. If you want to grow and you want to grow fast, you have to finance your construction. It just doesn't make sense. Otherwise, you're going to be waiting for cash for too long, or it takes forever to get the work done. And you're going to get into it. I'm going to tell you right now, even if you finance your construction, you're going to end up throwing some cash down.
Oh, yeah.
Like there's going to be things that come up, even when you throw these contingencies on it. Even everything's building. I've done this
you're
a bunch
coming
of
out of
times.
pocket. No,
And I keep increasing the construction budgets for like contingency. And then every single time, either the prices of something went up or something new came up that has to be covered very
you have to pave the
infrequently.
driveway twice.
You have to pave the driveway twice because you have to dig it up. And like, there's just so many different things that come up.
Yeah.
So like, it's always worth taking apart because I have a lot of clients that are like, nah, like we got the cash anyways, we'll just do it. And then they get into it, and I'm like, well, how come the kitchen just ends there? And they're like, well,
We ran out of money.
we ran out of cash, and we didn't get it at the end. And I'm like, oh, so that extra like $25 on your payment and
Right.
$100 when you close would have been really nice right now.
The way I always describe it to people is like, okay, you can just add this 10 grand onto your mortgage. And right now, what's it cost to borrow 10 grand approximately?
$42 a month.
$42. All right. So
Go to Home Depot and spend less than $42.
you cannot walk out of Kent or Home Depot without dropping a $200 at the cash. Like, so it's like, oh, I'm going to do it myself. I'm just going to pick away at it. It's like, okay, how many times are you going to walk in and out of those automatic opening doors? Because every time, like, you're leaving 100 on the way in and 100 on the way out. It's $200 a visit. So if you do that 8 times through the course of a month,
Yeah.
or you could have just paid $42 a
Right.
month.
Yes.
Right? It is worth looking into for sure. Just make sure you have a broker that's giving you products that are going to be very, very good.
The other thing too is like you mentioned, people like looking to get a lift of a property. You know that's valid, but that's a bit more like ambitious, like profit driven. But just the average first time buyer and our market, where a lot of young people are buying someone's grandmother's house,
Yep.
which may have all the bones in good shape and the roof was done, but the kitchen's original and you
Yep.
know there's dusty rose carpets and stuff.
Good bones.
So
Good
yeah,
bones.
good bones, sure, like quaint, you know. But that person may have 5% saved, and then they may look at that and say, "Well, then what?" Right?
Yeah,
Big time.
Well,
Yeah.
great, this right, no
Totally,
problem,
100%.
right? This
This
is how you do it.
Yeah, a lot of like young people rubbing nickels together to get into these properties. By the time you pay your D transfer,
especially
your
with the
lawyer costs,
price-
your inspections, and all of a sudden the rising prices, like the
And transfer, like what a racket, you know.
And
So-
you know, coming from renting, where they're like, okay, well, we don't want to be totally house poor. We want to feel like we have $5,000 in the bank account in case something comes up. Well, how are we going to do any of this?
Right. Well, this
and
is
a lot
how.
of them feel like we'll just chip it away. It's like no, like
That's what I remind a lot of them too. Is that I try not to like, I don't, I'm not insulting my client. I always remind them like, look, like I'm not doubting that you have the cash available, but no need to extend yourself to that level.
Mm-hmm.
Like if you can borrow it and keep your $20K in the bank, because just in case something does come
Yeah.
up, or like if car blows up, like, you know, there's so many different things that I'd be better that you do that and take on your $42 a month and the extra little bit down, so you have some wiggle room to play.
it's also
with.
the only time you're going to have that
Right.
option.
Until
Like you
you
can't come back
refinance.
here a
Go
year
back.
later and be like,
You
oh, I'm
can't
going
go
to
back.
add to my mortgage now. It's like no, you can't do it.
Done
Yeah.
and dusted.
Right? Like this is your one time to do it. Get the cash. And it's also really motivating because there's a time restriction on this. You can't be like, I'll get the cash and I'll do it when I want. It's like,
Depends
no.
on the bank.
Like-
So some have a 4-month, 3 to 4 months restriction. Some actually have no restriction. But so there's a bank, for example, First National. They don't really have a specific time restriction, but they advance all the money to the lawyer. And so say it's $20,000 for the work.
Yeah.
It's just sitting in trust with your lawyer until we prove the work was done, and then they allow the lawyer to release it. My point is, you're paying interest
right
interest
away.
on
Keep
it.
an eye on your lawyer.
So-
Show up when he's got a new Corvette.
So while while it's like there's no pressure with them to get it done in any particular deadline, you're paying for it.
Yeah.
The other thing that's important to note too, just a quick side note, is that you don't get the money in stages. So say you had 3 quotes for like a kitchen, a roof, and a heat pump, and you do one of those things. You can't go, okay, can I have 8 of the 30,000?
Yeah.
It's all when all is
or
done.
nothing.
Yeah, that's why you really need to line up your contractors and have them all on the same page. Like when the total project is done,
Right.
and everyone needs to be done here in 45 days, and you're going to get
Or,
paid.
or you have a line
Everyone's
of
getting
credit or
paid.
something.
Yeah.
You pay for some of it yourself. You pay yourself back.
Yeah.
To shift a little bit on that, so we're talking now for homeowners, the Mortgage Plus, and you're saying you don't get paid in stages. For investors,
Yeah.
when buying multi-units and things like that, there are options for
Yeah.
Construction draws, basically.
way more money.
Yeah.
Not necessarily limited by a percentage
No,
or a
just-
set dollar value.
Limited by appraisal, really,
Limited by appraisal
and cash flow.
and cash flow. And they do have the opportunity there to do draws. And I'm going
Yeah.
to this because this is
your
literally
jam,
my
yeah.
jam. This is how I built my business. Like without this, I'd be nothing, literally.
Yeah.
And so, I guess maybe we dive into that a little bit. Like I started basically with private lending to do it, but I did that structure where I got the money on the purchase and then I had whatever 5 draws set up and they would be like ding based on completing this much work. We'll drop off. X.
Yeah. So there's an inspection report.
Yes.
Yeah, exactly. So it's not dissimilar to just building a home.
Yeah.
Where you get construction draw mortgages. So
Yeah, and the way it works is obviously you're purchasing the price at X, then you have an as complete appraisal that's done in advance of X plus
based on your quotes again, right?
Yeah.
$1 million of value once you've lifted a underperforming property to a performing property, and then it's like, all right, well, to get that $1 million of value is going to take say $600,000 worth of work,
Yep.
and they'll give you. When you get the windows done, when you get the heating system changed, they'll give you the first 100,000, and then so on and so on, and then you have your final takeout at the end. That's what Neal's kind of alluding to.
Yeah.
It speaks to how important the appraisals are.
Right.
And again, not all lenders are going to do that product.
But it is very doable. The cool thing with so what you're talking about is commercial financing.
Exactly. Yeah.
And commercial financing is interesting because it's kind of this funny thing where with residential, like while there's ways to be creative and do this or that, it's still like it's a box, right? Like you can either do X, Y, Z, or then you cannot.
And it's solely you focused.
Right.
They don't care how nice the house is. They don't care how good of a
Doesn't
deal
matter.
you're getting.
Doesn't matter.
They care about the borrower.
Whereas
period.
with commercial, it is more focused on the asset. They want to know that you're a solid sponsor, a good borrower, but it is a lot more about the asset, which makes sense because when you buy a house, you have to pay for it. When you buy a 20-unit apartment building, you can't be expected to pay for it. The building is meant to pay for itself and then some, and that's what a commercial bank analyzes.
Yeah.
But so it's harder to answer like when someone says, what can I do in this residential scenario? Here's what you can, here's what you can't do.
Yeah.
With commercial, there aren't such strict goalposts, which is bad because it's hard to give like a definitive answer when someone's like, could I do this? Like, maybe.
Could be zero down. Could be 35% down.
Let's get into it to figure it out. But that's also the good thing because you can get creative. You can get like on a case by case, like unique solution,
Big
So
time.
that's why the due diligence is like 6 weeks.
As I was thinking in my head right
If
now,
you're
this
lucky.
is why you do long due diligence. Make sure you do your enviro, your inspections, your appraisals, all that before firming up on the deal.
Yes.
Yeah, I'm going to retract from all the things I've said in previous episodes of just saying firm up. But that makes sense.
And I think that's important for people to look forward to. We talked a lot about the pros of going to 6+ units because the cap rate it starts working in your favor and you can get creative with your end values. And obviously the end value and the takeout is a lot of what we talk about. You still need to be solid unto yourself and you often will have to have larger down payments.
Yeah.
But after that, they look at the building as a performing asset and are financing on its strength as much as they're financing on your strength.
Like you're the backer, so they
Yeah.
need to know that you're financially capable, right? But unlike residential, they're not so worried about like, well, how much is your car payment? You know,
Yeah.
that's not crucial. But they want to know that you're, solid. But with the commercial side, the other thing too, to your point, yes, larger down payments, but they also allow vendor takebacks.
Yep.
Whereas with residential, like you can't get, no matter what people like to say, you cannot get a vendor takeback to buy a duplex, right?
You cannot get a vendor takeback to buy a duplex.
Okay.
Right. You like
Okay, fine.
so could you sorry to clarify, do people do it? Sure, but like should that be happening? No.
I know nothing.
Yeah.
We'll talk about that. Well, I think we should do a whole episode about commercial financing
We should
and vendor
separately, for
takebacks because I think it is incredibly important. I was talking about someone about this the other day, and she was asking about purchasing a property effectively commercially And
Right.
I was like, yeah, you're going to get into you're going to have a significant down payment. She's like, well, how can I get into it with less down payment? Like, in theory, a vendor take back, but the property you're looking at is currently residential. You're talking about converting it to commercial. Like, you're opening a bag of worms with this sort of thing.
Yeah.
But then I'll say, well, but are you buying it for your own business? Because there are some situations where a business can buy a building for its own owner-occupied sole use and get in with zero down.
100%.
We've done a few of those. Yeah.
Yeah. Doesn't work if you're a realtor. They don't care about
No.
us. But like if you're like a white collar,
If you have like a shop or like
yeah.
you know, like a company that needs a proper building, like
Contracting company.
like we did it for you could for seriously we did it for a we did it
Neil
for
is way too visual that if like any of this stuff gets it comes back, like Neil's like wink, wink. What are you doing?
yeah. We did it last year. We did one for a barber shop during a pandemic when they were closed half the year.
Yeah.
With no money down.
Yeah.
No way.
Yeah.
No way.
It was,
And it was super
great.
frustrating because I, as a property manager, went through this. I'm like, okay, well, I need a place to store my materials, you know, to have an office if someone wants to drop off checks, you know, and to even like, it sounds ridiculous, but I've got like 8 extra fridges kicking around. Like, I needed
100%.
a shop for that. And I think they still were like,
To have Chandler's problems.
8 fridges.
You guys have 8 fridges.
I've got a fridge addiction.
Yeah. Back to the VTB thing for a second.
Yes.
So what I mean by you can't do it is that when you get a mortgage from a traditional bank,
Can't do it for residential.
If you just do, for a residential property, for a 2-unit property or something like that, if you go to like a Scotia Bank or TD, all those banks have a clause in their contract that says no secondary financing permitted. You can't have a second mortgage registered. Do people register second mortgages later? All the time, sure. But up front, at time of
You
purchase.
can't be doing that.
Also,
or do they do promissory notes?
I'm sure people do lots of stuff.
Yeah.
And you can't have a borrowed down payment. So if you're saying, like if the bank says, great, where's your down payment coming from for this little duplex? And you say the VTB, then they say, well, that's not acceptable. Sorry, for 2 reasons. You can't borrow your down payment. You can't have a second mortgage. But could you do a 2-unit commercially? Yes. And then it gets...
On a side note too, when you say you can't borrow your down payment, an unsecured borrowing.
Right, an unsecured borrowing.
Yeah.
That's right. So if you have a home equity line of credit, that's secured borrowing because that's really your money.
Yep.
It's your equity. You're just accessing it through a credit facility. That's different.
Secured means registered against an asset, whereas unsecured is like, here's a line of credit.
Or a credit card.
Yeah.
That's right.
Just because we're sort of or previewing some future things, because I do think we need to do a full episode on vendor takebacks. But just for real lay terms for people not understanding, here's a hypothetical example. It's commercial financing and you need to put 25% down. There could be a scenario whereby you've only got 15% down payment, but the seller will hold an additional 10% mortgage that will be registered against the property. So
As a second mortgage.
yeah, so you've got a 15% down payment. The bank is only willing to hold 75% loan. So the seller in second position to the bank loan will have another mortgage of 10%. We're going to delve into that in depth because it's incredibly interesting and it's very important and it's very useful for a lot of reasons, not just for the buyer, but also for the seller. We'll talk about that in another episode, but just if people are curious, what are they talking about? It's called a vendor take back. That's kind of an old term for it.
Those are great. I use those a lot to get rolling. Like I still do. People still do, honestly, even on like a very big scale. You'll see huge transactions taking place with vendor takebacks.
And sellers are down to them for a few reasons. Again, we'll talk about that in another
To focus, because we're kind of work a little bit mostly on the residential side of things, a good question that I get a lot that I just want to hit kind of quickly is fixed versus variable and open versus closed.
Right. So open versus closed is a quicker one. So open just means you have no penalty to pay off the mortgage at any point.
Yeah.
That's rarely needed.
Yeah.
Also, it comes with a much higher interest rate.
Yeah.
The only time that's relevant is like, in my opinion, say you are flipping a property, you're only going to have it for 3 months or something. But even then, so there's also where you can get a secured line of credit.
Yeah.
And a secured line of credit is open just by automatically.
Yeah.
And then it's not at the astronomical rate that an open mortgage is. It's just more limited in that a line of credit can only be up to 65% of a property's value.
Okay. Yeah.
Whereas a mortgage, you can go up to 80 if it's like an investment property, let's say, right?
Open and fixed means like open term. How long do I have to be committed to this mortgage product?
Right. So
it's open. You can terminate it early without penalty. If you have a fixed one that's say for 5 years and you terminate after 1 year, the bank's going to say, hey, you owe us the remaining 4 years of interest. But there's a trade-off for this. Right?
Yeah, well, the rate's cheaper. But so here's in our opinion, the often the better way to go. If it's going to be like a 1 year thing, let's say, you could do a 1 year fixed term, which means after 1 year you can pay it off with no penalty. But it's really hard to time things that accurately. So if you pay it off in 9 months, you'll still have a penalty. And if you if it's not ready to be paid off or sold in a year, then you have to renew.
Yeah.
And then 3 months later you sell it, you still have a penalty.
Yeah.
So what we would usually suggest to mitigate penalties is just a variable rate mortgage, which I'll come back to that part of your question. But a variable rate mortgage, one of its features is that it has the smallest possible penalty to break.
Yeah, what's it, 3 months?
3 months worth of interest whenever you break it. So you don't have to worry about like, am I 3 months in? Am I 3 years in? Doesn't matter. It's 3 months worth of interest, period.
This is why, again,
which is relatively small in the grand scheme of things.
I'm not rate sensitive, right? A lot of people are rate sensitive, like, oh, this one's 2.19. Oh, this one's 2.14. I'm going with the 2.14. I just smoked you guys, right? Like, and if you walk and say, give me your best rate, they're gonna be like, all right, here's a 5-year closed product that you can't port and like it's gonna have all these things, but we're gonna give you the best rate. To me, it's all about having the conversation with your broker of, what are your goals? Well, my goal is to be in and out of this property in 12 months.
Yeah.
And what are you going to do after that? Are you going to buy another property? Because if you are, then maybe we can port. So you need to have a mortgage product that's portable. And what does that look like? And how do you top up if the new one's more expensive, et cetera? But if it's like, no, I'm just going to turn it and burn it and then I'm going to go to Europe for a year. It's like, okay, you need to look at a variable product or something like this because you're going to kill all your profits.
The other thing too, so that's a good point about rate. So the analogy I use, like people ask, well, I want the lowest rate. And I try to reframe that and say, you want the best deal. And rate is one big, admittedly, part of that. But when you go shopping for a house with these guys, you don't say, I would like to buy the cheapest house, please.
Yeah.
Like you have other criteria.
Yeah.
And then obviously budget is part of that.
It's a good way of looking at it.
But here's a quick example. It's really important. So a variable rate, again, 3 months worth of interest is the penalty. But how is that calculated? So say you have one bank and their variable rate is 1.5. And you have another bank and their variable rate is 1.4. They both charge 3 months worth of interest.
Yeah.
As a penalty. Great, 1.4 is better. But not necessarily, because so what one bank may do is charge 3 months worth of interest at your actual rate. So let's say it's 1.5.
Oh, yeah.
The other will charge 3 months worth of interest based on the prime rate, which is 2.45 currently, which is 1% higher. Suddenly your penalty is a lot greater.
Yeah.
Right? So, there's
fine print.
is crucial.
Yeah.
Yeah.
I say, for most investors, I think it really makes the most sense to go with open variable style product.
I think so.
Because I have a lot of them that are like, oh, sweet, like we got this duplex, we're going to lock it in 5 years, we know what we're doing. And I'm like, you say that now,
yeah, you're going to change your mind.
You're going to change your mind that either you don't like dealing with this investment,
I want to refi.
or you want to refi and buy another place. So I'm always hounding it. I made that mistake on my very first multi-unit. It's just a 3-unit. But I was actually getting some advice from another person who's an investor, and he's like, I have one piece of advice for you, and that's go with an open variable product because you never know what you're going to do. I was like, I know what I'm doing. I'm doing a fixed 3-year, no problem. Rates the bomb. I did it, and literally like a year and a half later, I wanted to go refi, and it was a huge mess of like
big
paying
penalty,
them out.
yeah.
The penalty was insane. And I was like, okay, now it totally makes sense. And so all my investor clients, when they ask, I'm like, let's go with something that's open and variable. I know
it's just flexibility.
You need the flexibility in this business. You got to remember, you're running it like a business. Unless you have you're buying like a single family and you intend to live there for a super extended period of time. I just very infrequently find it makes sense to go with the fixed.
So I agree. So just to add, so you asked about fixed versus variable. People love making these sweeping statements, especially like, again, someone's buying their first home and they've got their dad and their coworker in their ear and their uncle did this. And that's, so people love to say,
it's true.
People love to say like, you should always go fixed. It's better. Or like verbatim, people will say you should always go variable because historically it outperforms the fixed.
Yep.
Word for word, people will say that.
I've heard that one before.
I've heard that true. And it is technically true, but there's so much more in it than that.
So to me, here are a few factors. One is, what are you doing, right? So like if you're an investor, especially if it doesn't matter. If you're a first-time investor, I always say to clients, what if you don't like it? What if a year later you realize hate being a landlord and these people are like ruining your life and you want to sell? Let's mitigate that cost of the penalties, variable.
Yep.
Or if you are doubling down like you guys and we all are doing, saying, no, I'm not selling, I'm going to keep going. Well, statistically, compared to the person who lives in their suburban home for 20 years, the likelihood of you breaking your mortgage because you're selling, refinancing, whatever, is huge. Yeah. So minimize that piece. So the only time I'll make a blanket statement is to say a variable for rentals is better. The other thing is, why not go with a variable, right? Like in general, why not? Well, it could go up, right? Like that's the fear. Mm-hmm. Okay, it's not your money. Your tenants are paying for it. So your cash flow will decrease, but still it's not like coming out of your pocket. It's not coming out of Chandler's lunch money, right? Like you still have peanut butter for breakfast. You'll be okay. Yeah. Also, the interest on a rental property is tax deductible, 100% tax deductible. Yeah. So if the rate goes up and your interest increases, well, at least so does your tax deduction. right?
Yep.
So you have a mitigating factor that a single family personal home doesn't.
Yep. These are all great points.
So for the flexibility, the tax deductibility, it makes sense. For a personal home, it then depends, like if it's just a person buying a house, it depends on their financial picture. It depends, I would say, on the difference. So sometimes, say a fixed rate is 2 and a variable is 1.9. All right, for someone buying just their home, like, yeah, fixed probably makes more sense.
Yep.
But right now, a fixed rate is in the low 2s and a variable rate's in the low 1s. So like that's appealing because yes, there's a risk of it going
Not a
up,
big gap again.
but your
Yeah.
initial savings
Yeah.
are significant.
Yeah.
Also, like if someone's got, a good down payment, good job, maybe they make bonuses, they're in a trajectory where their income's growing, like they can probably stomach a variable better. Someone putting, first-time buyer putting 5% down, that's the bulk of their savings. They've got 2 kids in daycare.
And they don't have a lot of predictability of
income.
wage increase. Yeah.
Yeah. So probably fix is probably better for them, right?
Yep.
So it's case by case, and that's the problem with these blanket statements, is like, oh, you should always do this. No one should always ever do anything.
Yeah.
And it's also like the person telling you that blanket statement is usually very well intentioned, and what they did, because I did a fix. Well,
It's
awesome.
based on their personal experience
Right.
that this was
Also,
worked
like
well for them.
12 years ago.
And also, it's a transactional. This is the product we have right now. This is what, you came in saying you want the lowest rate. I was like, okay, well, this is this, and we're not going to delve into it anymore because I've got another appointment in 15 minutes.
Yeah.
So
I
we're
was-
just going to wrap it up.
I was at a bank a little while ago just doing like banking, and they banks are now, they have the like tables where they're open, and like someone was having a mortgage appointment that I was eavesdropping on, just like sitting in the middle of the bank branch with someone.
Yeah.
And the guy goes, well, what kind of rate do you want? And the client was like, I guess like a fixed one. What do you got? And the guy was like, the 4 year is pretty good. And he was like, oh, okay, that sounds good. Like, I just wanted to like shake him, be like, where's the advice? Your card says financial advisor.
Yeah.
Advise.
I make my decision on whichever bank has the free iPad.
Oh,
Right.
yeah.
That's important.
Free iPad promotion. I forget about the extra $25,000 I'm going to spend over the next few years, but I'm getting an iPad on closing day.
Yeah.
And I saw one the
that's
other day
clutch.
where I was copied on an email between a client and their lawyer, which like I don't need to be copied on, but I was copied on it. And it was this awkward conversation. We're like, hey, they were like asking questions, lawyer to client, back and forth. What are your rates and blah, blah, blah. And then at some point in the thread, the buyer was like, my mortgage company just said that if I go with their lawyer, they'll pay for it for free. And I'm like, I'm still in the thread.
Right.
You guys sort this out on your own. But like, there was a mortgage company offering to pay for like legal fees.
Yeah, that's probably on a purchase though. That's very strange. I
Yeah,
don't know.
we do have to wrap it up. I feel
We
like
do.
we could talk about this at length, but maybe there's a part 2 coming. But Neal,
Yeah,
You gotta-
before we wrap it up, I think we definitely will do a part 2 on more commercial stuff.
Right.
But for today, because we are transitioning into the Success Podcast,
what?
is success to you, Igor?
Yeah,
To me,
glad you remember this.
like just in general, how would I define success?
How would you define success? Like, what
What's
do you
it
like?
mean to you?
Yeah.
I know you and I have talked about this casually, so we're putting you on the spot here. But
To give a little bit of
Yeah.
background, like we talked about, like for me, it was like financial freedom to do whatever I wanted to do at a certain age.
Yeah.
I forget almost.
I think it was just getting to the point where my money was working independently
That's-
of
yes,
me, and I would
yeah.
start buying some of my time back.
Yeah. Well, I think it's that. I mean, you and I talk a lot about having no time, and I have a little like I have my son. He's turning 1 in 2 weeks, so that's really changed my perception of time and how important it is to me. Yeah. I mean, it's probably the same answer. It's the ability to do what I want when I choose to do it without like sacrificing, I guess, quality or something like that. Like in terms of. Like anyone can do what they want to some degree, but they might not do it in a very good way or like a comfortable way. So, and it's not like I don't aspire to, for example, like you guys have more property than I do, and I don't necessarily want to catch up to either of you, and not in like a negative way. It's just I don't aspire to have 100 units.
Yeah.
But I've got what I've got. I'll probably end up getting more. But so success is, I think, it's the ability to have the time to
Do the things you enjoy.
enjoy my life. Not that I don't enjoy my life, but just continue growing that ability. I'm an immigrant. I moved here when I was 8 years old. My parents had to start their life over,
Yeah.
and they worked really hard to get where they're at. And now I've been able to, not that they really need it, but I've been able to help them with some things. So I'm really proud of that. So it's just being able to like contribute. Like I've always wanted to start like a scholarship and things like that. And that's something I think I'm actually like able to work towards soon. So things like that,
Yeah.
I think that's success. And the other thing too, like I love rap music. I love everything to do with that world. And so there's a common trend is like, if I eat, everybody eats. Now people need to want to eat as well, which is something I've learned. Like you can't just pull everyone with you just cause.
Yeah.
But I do want to be able to help and empower those around me to succeed to whatever degree they want, and I could help them. So that's success to me too. Like it's boring if you're on your own.
Yeah.
You know?
Not just your own personal freedom, being able to help people
Yeah.
achieve that for themselves and do what they want to do as well.
That's
Yeah.
right. So I mean, yeah, you're kind of putting me on the spot.
No,
but
man, I think that's a great
that
answer,
is
and
a
I
great
think it's a
answer,
great way to wrap it up. And
Yeah.
I think we definitely need to do a part 2 of this. So thanks for coming by.
Big time.
Thanks for having me.
Yeah,
All
thanks
right.
for coming on, Igor. Thanks
do
for
you
listening,
wanna-
everyone.
Do you want
All
to
right.
plug if anyone wants to work with you? Or how do they get a hold of you?
We'll put your at. in the
Yeah,
handle
yeah.
here, but
Just call me. My number 902-441-6493. That's it.
There we
That's
go,
pretty
right there,
simple.
phone number, but we'll have
Yeah,
his
yeah, yeah.
information on everything that we post as well. But yeah, thanks for listening. I'm sure people will have some questions from this that are listening. So hopefully people post some comments because we
Totally.
do a second round, then we can address those questions.
Yeah.
getting the money is everything. I've
Yeah.
said this, I'm sure. a
Yeah, I
couple
mean,
times on
without the
here. Getting
money,
is everything.
you can't buy anything without
So-
the money. So
Big time.
Got to make it rain. All right.
Awesome. Thanks
See
for
you
listening,
next
everyone.
time.
Talk to you.
When I was broke, I had rich habits. When I was broke, I had rich habits.